Hello guys, good afternoon. Today we're going to be going over the week's price action Monday, Tuesday, Wednesday, and Friday. We will do a little bit of an analysis on Thursday, but nothing too deep as we had a lot of news that day around the open, so that tends to ruin price action. And as there were, I think it was like 5 or 6 news, maybe even more, medium and high impact around the open again. It's just a day that I completely avoided, didn't even see it on the charts. I do believe I did a little bit of an analysis after it, after news finished, basically, but nothing really more than that, being honest. So we'll jump straight into Monday, which is this little bit of price action that we have here. And Monday, if I remember correctly, traded nothing. And it was because we never really got anything to trade. And as you can see, midnight starts at this level here, right? Trades a bit lower, little run on this liquidity here, and starts going aggressively higher, right? Retraces into this fair value gap right here, continues going higher, retraces into the order block, I believe, right? Does look like it retraced into this order block here, continues going higher, retraces, mitigates fair value gap, the order block probably as well, continues higher, retraces, fair value gap, order block, continues higher. This was basically London just going higher. It does sweep some buy side liquidity, as you can see, it even breaks or goes above that high, right? So a lot of buy side liquidity taken at that point, so a lot of buy stops triggered. So when prices just started going lower, that's clearly how it took all of the well, the buy stops that were there, definitely the stop losses were mitigated at that point, and then just continues going higher. Takes a little bit of buy side liquidity through pre-New York, right? Pre-New York takes London's high. You see a little bit of a change in the direction. Price creates a fair value gap, mitigates that, also mitigates this last upwards candle before going lower, and starts going aggressively lower through phase one, right? And then we see this, which if we look at the open happened right on this candle, and basically that candle begins and starts trading higher. So what would have I liked to see as an example? Price goes higher, could have been a manipulation move, right? If we're basing ourselves on the power of 3 concept, this is manipulation and potential distribution lower. But after the high is taken as liquidity, and after even that, but this high is taken as liquidity, at no point it actually shows any kind of displacement going lower, so there's nothing for me to really do. Even when going higher, it never creates a fair value gap through the session, right, through New York session. So there were no opportunities for me to buy, unless as an example, I could have said, well, price is mitigating, if I remember correctly, it was like a 50-minute order block around this levels, around this area. Price mitigates that, there's a 5-minute fair value gap, mitigates that, breaks a high, retraces, session begins already inside of this structure, and could have looked for buys in the lower time frames, which we might get, right? So 8:30 is here, trades higher, no fair value gap, no fair value gap. This is the first fair value gap, right? This could have been an entry. Well, would have worked out, but again, without much of a base on the analysis, if I can be honest. So Monday was just nothing from my point of view. So there's really not much to discuss about that day. If I remember correctly, I just looked at price because there's really not that much else that you can do throughout a session like that, with price just really not giving you what you look for on a daily basis, and it is what it is. Now going on to Tuesday, we had a somewhat good opportunity that we'll discuss, and that is interesting to me because it was an entry that had everything that I will usually look for, but it didn't work out the way that I would have expected. And from what I've been able to tell, it wasn't much of my mistake, right? It's not that this is an entry that I would have taken, even if I would have analyzed it more thoroughly, right? Because there are multiple things that just kind of not ruin price action, but basically make the chart look dirty, right? Not clean at all. And the price action is just something that you can't really understand at that moment. So for me, it's not a missed opportunity, right? It definitely works out. It does have some things that we look for, but for me, it's really not that worth it. But we'll discuss it now. So midnight opens, starts trading higher. We see London taking some highs as buy side liquidity, a tiny bit of a range, aggression higher, aggression lower, fair value gaps, price here at the end of the loan session goes above a couple of highs, starts going aggressively lower, fair value gap, even an order block in here, right? Price trades into the order block and the fair value gap starts going lower aggressively. There's this is an order block. If I understand order blocks correctly, it's an order block. Price trades into that right here. Also, phase one, we have move against the trend, run and buy side liquidity, aggression lower, creates a fair value gap in here. And here's where the complicated scenario comes in, because this is a 50-minute fair value gap, right? And we'll leave it exactly like that so you see it in the lower time frames. But what is it that we have? We have price going higher. We have a tiny round of buy side liquidity here that we can see in the 5-minute, the 1-minute, and all the time frames. And this move higher basically does mitigate this low, but in my opinion, should have mitigated like the candle, at least the open of the candle, and it doesn't get to that for this order block to be mitigated, but it does mitigate the low of the candle, which maybe is worth something. But again, order blocks is not something that I understand that much based on ICT. Otherwise, I would theoretically understand them a little bit more. The thing is that it goes higher, takes a little bit of buy side liquidity. We have the fact that phase one is basically taking buy side liquidity and going against the trend. Aggression lower, 50-minute fair value gap, right? That also broke structure, and price trades back into it, and that's where the lower time frame entry occurs. And we need to discuss it because it's complicated, understandable why we could have taken it, but complicated, right? So keep in mind we trade from 8:30 and ahead. So even this first mitigation, which is this, right? The fair value gap is already created here when this candle, this is the candle that closes it basically. Then price trades into it, right? We see aggression lower. We have tiny runs on buy side liquidity, aggression lower, market shift here or here, whatever you want to call it, fair value gap. Maybe even the order block, which could have been on this low, right? So this completely fails, which I wouldn't really worry about it that much because, well, we're not trading up until 8:30, right? Which is exactly this candle. So price opens on this level right here. And what is it that we expect for price to do? Just as happened with this one, right? We have price going higher and then lower. Price here goes a bit lower, then higher, and then lower, right? So this move higher and this move higher here, which are based on the power of three or the concept of market protraction, we just understand that what the market is actually doing here is just manipulating people into believing that the session could be bullish, right? When it's actually going to be exactly the opposite, right? Session begins, you can see how we have a couple of good green candles going higher, and all that it really does is take buy side liquidity, aggressively going lower in the 1 minute, all of this, of course, fair value gap, and this could have been the entry that I was talking about, right? So why could we take in this entry? We have the fact that we are still within this 50-minute fair value gap, right? Besides from that, what else do we have? Well, this move here ranged, continued lower, and also, as you can see, on the left, it took a lot of buy side liquidity. We have a little bit of an aggression. There's no fair value gaps in the higher time frames in this move lower. And what is generated in the middle is buy side liquidity. Session opens, ranges a little bit, takes buy side liquidity, displacement lower. So what do we say that we have? We have run and buy side liquidity, move against the trend, and the concept of power of three, right? We are at a theoretical premium price because we are above the open of New York, right? So premium price. And we have a pretty aggressive candle that shows that displacement with the market shift that we usually wait for. And that would have been the entry. Now, if this exact price action would have happened here, and would have been inside of the open, of course, we're taking buy side liquidity, and then we see immediate displacement while mitigating a 50-minute fair value gap. That would have been enough. But what bothers me is this first mitigation and the second, right? Because we have multiple mitigations on the level. So I would have just loved to see, as an example, if a 5-minute fair value gap was created on that first downwards move, it would have been great, right? Because if this move had a fair value gap for us to look into lower time frames and look for that lower time frame fair value gap, then I would have been fine with it, right? But price had the fair value gap already from here, from this candle's high to this candle's low. Price trades into it, gives us the first loss. Ranges, aggression lower, session opens, trades a bit lower, trades a bit higher, market manipulation, then continues lower. So it's definitely an entry that I would have liked to take if it would have happened in a different context, but in this one, it's just too complicated, right? That I saw the aggression on the candle, but I was not even thinking about selling from this point because the 50-minute fair value gap had been mitigated already, and all of this just became too unclear price action for me. So I just decided to completely avoid it, and we'll missed out on a pretty good opportunity, as you can see, because we could have easily gone for previous day's low, right? As previous day's high was this one, is taken through, actually, this is previous day's high. Yeah, this previous day's high is taken around midnight in London's price action, and then usually when you see previous day's high or previous day's low taken, you tend to see price action actually going all the way to the other side. And what I mean with that is that, as an example, if you see price either at the beginning or, well, yeah, at the beginning of the day should be, takes either previous day's, as an example, if it takes previous day's low, we could easily see it through the session or through the rest of the day going to the other side, right? Taking previous day's high and stuff like that. As an example, that's why when previous week's low was taken, I was definitely expecting for price to maybe reach up into previous week's high, right? Which we ended up getting into, and we'll talk about that later. But the only concern that I had about going all the way up to previous week's high is that it was pretty far, right? It was pretty far because it's this high right here. So it wasn't something easy to achieve, because when we took previous week's low, we're talking about 170 pips to move, right? And we were even a little bit lower, and at this point, even much lower, right? We're talking about 200 pips. Which, again, it's achievable, but yeah. So that was the only opportunity, if I remember correctly, on euro dollar in this day. And the other thing that I did look for was this one, because we had previous Thursday, if I remember correctly, we had a very similar setup where we have a 50-minute fair value gap right here, right? Just kind of trying to get down to that low. The 5-minute the 5-minute creates a high. That high is taken as liquidity, right? Mitigation of the 50-minute fair value gap, and then we're looking for the lower time frame entries inside of that. Now, what was the issue with this one? News, right? At this exact point, we're 9:45. We had news. So I don't know if from dollar or euro. I do believe we can put the pins. Yeah. So here it is. We had 2 medium impact, right? As you can see, it doesn't really move that much. Reason why they're medium, and that kind of ruined price action. But as an example, what is that we have right here? Fair value gap. Right, could have we traded that? Definitely. Why did I not trade this? Well, it's really close to 10 a.m., right? We had already a pretty impulsive move lower. We were really close to target. Another thing, because the stop loss would have been pretty large. We're talking about entering there. Stop loss would have been 13 pips and aiming for 15 pips, a little bit over a 1-to-1, so definitely not something that you could have done, and it just doesn't make sense. And also we had news at 10, so you can see right here, which were high impact news, and well, there's a couple of low impact, which I didn't even know about. Thing is that it was surrounded by news, so for me it's just definitely worth skipping. But the reason why I was looking for sales there is because we had run and stops, displacement lower that causes a market shift as well, and we had a fair value gap in here where we could have sold, or just this, right? This exact fair value gap would have been fine to just look for the continuation of what we were looking for, right? Simply enough. Okay, let's now jump onto Wednesday, where it was the best day, and I made a mistake, which we'll see in a couple of minutes, and you'll realize why. It's a complicated trade, but we'll talk about it now. I'm gonna delete this now, so actually put it here. What did I do? Fuck. So, what do we have? Starting the day here, right? What is it that we see? What is it that we see before? We see market retraction or power of 3 working out here. Price goes against the trend, continues higher, right? So clear manipulation of that, so that's great. London was basically a little bit of a market retraction, going a little lower and then continuing higher. Price just continues to respect that trend throughout the entire session. And then we get to this point where price just turns around like nothing, right? Just stops, turns around, and starts going lower. What did it reach? Well, it reached this high, which it was previous days. No, it wasn't previous days high. No, it's just a high. Oh, no. Actually. What happened here was exactly this. Price takes the highest, right? Because this is the highest point, but the fact that it did it by only 1 tick or 2 ticks maximum, it's not good enough for me. Right? It was not good enough, so I decided to call it price just respecting equal highs. So it's buy side liquidity being left there, and then look at what we get through the session, because it was actually quite funny. Session opens right before on pre-New York. We basically had a range. Price just continued to respect order blocks, as you can see. 1, 2, maybe even this one that we have here, whichever you want to choose. 3, right, and maybe even 4th. If we wanted to call this the order block, is not mitigated, or this probably the 15-minute order block, or this I think it's actually mitigated. Maybe no, close enough, but no. So just price respect the order blocks, right? And look at what happens and the way that price gets to this level. Exactly, if we look at the low of the candle, 770, and the low on this one is 770, right? Exactly to a tick. And we see an immediate reaction. That's just manipulation, right? We could go a little bit further in that and say, well, we got a couple of lows already, right? Because maybe this one does go below that one, but as it is somewhat close, we could say that it's still valid, right? Or just go with this equal lows, and that's good enough as well. Price, of course, this is clear manipulation. Goes higher, aggressively lower, takes the sell side liquidity, and then we see this. Now, my problem on this one, I do believe we discussed it on this day's video, September 7th, 11% of this trade. But basically, the complicated thing was calling this the market shift, which is a market shift, and also has the displacement that we're looking for. Otherwise, we could have gone for this displacement, which is the better one, as it is on the 50% or below of the entire move, right? Which is we're always going to be trying to buy at discount and selling at premium, and that's exactly what we get. What's the trade on that day? Well, price goes down into the 5-minute fair value gap, even a 1-minute order block. Price reacts to that, tiny high, tiny low, higher high, right? High, low, higher high. Over here, higher high, higher low, higher high, right? We have a market shift or a change in the trend on this one. At least for me, would have been considered enough, as I showed on the video, and this would have been the entry. Entry stop loss could have been two things, either going for this low, which in my opinion should have been respected as it was, and it's what I went for. And targeting wise, I can say I said it on the video that this was a little bit risky because it's pretty far out. We're talking about 11R, and honestly, even if I had the opportunity to take an 11R, I'm very likely not to take it. Not to take it, I'm going to close it much earlier than that, right? So as an example, if I have a monthly target of a 10% or a weekly target of 5-6%, I'm just going to close at that, right? But as an example, we have multiple things to look for. As an example, all of these highs around the same level, right? This was definitely a point where I would have wanted to just move my stop loss to break even. At the very least, I'm not going to close partials at 1 to 2. At least I want to close partials at 1 to 4 minimum. And then we get this, right? Another couple of highs together where we could have aimed. And what do we have here? We have already 5R. This, in my opinion, would have been a nice target to get. I don't really remember what it targeted on the paper trading trade, but this is definitely a really good target. And then we have this highs, and then finally London's high, which would have been 11.92 as discussed on the video, right? Maybe a little bit more than that. If we wanted to go even further than that, I would have not gone for previous day's high. There's no way, but as you can see, 27R. Well, 26 was 57. That was this day's price action. This was the cleanest day in my opinion because price just went to a sell side. Well, actually goes lower, reacts to a low, creates sell side liquidity. We already had some, but just creates a little bit more. Takes that, change in direction, fair value gap, trace into it, and we just get the typical entry, right? As I've mentioned multiple times already, what is that we look for? Run and stops. Displacement on 5-15-minute market shift. So displacement, when I say displacement, I want to see fair value gaps created, right? Market shift, simply market shift again on 5-15-minute. Lower time frames, mitigate fair value gaps on 5-minute, 15-minute, depending on what is created. 5-minute, exactly the same, right? Market shift with displacement on lower time frames, execution on lower time frames. On that lower time frame probability gap, simply. That's, well, we could say that it's a six-step trading per se, and that's basically what I look for. Of course, before this, we tend to have a direction, a set direction by whatever we want to think we wait for. That's basically what we'd look for. How could we determine the bullish direction? The sell side liquidity being taken, the fact that buy side liquidity was just respected up there. So it's just multiple things. And of course, the multiple liquidity pulls that we took from the daily chart, the previous daily lower low. I mean, if we go to the daily chart and look at it from here, look at where we are. Okay. Price. This is where we were. This is where we could have bought, right? We are at a pretty low point. We're already below this low without much of a retracement. Then this low was taken. We're very, very discount price. And even looking at it from here, we are. It was the other way around. Hold on. We haven't even gotten close to the 50%, right? So yeah, we're pretty discount. So definitely down here we want to be buying up to this premium price to maybe then reverse or do whatever we want there. We'll see what we get on the future, honestly. It'll do something else now. Okay, Thursday. Let's look at Thursday. I didn't even analyze Thursday further than just a couple of messages. But what I've mentioned about Thursday is this FIBA. Look at where price comes back to 50%, 62%. I kind of wanted to see it respecting something. It does mitigate this fair value gap here, right? Yeah, this, which is cool, right? Definitely cool in the 1 hour time frame. But I would have liked to see like an order block, maybe a liquidity void being filled. Something, something, but we never really got that, which is a shame. But overall, a nice retracement into this Fibonacci that then turns bullish, as we already saw. So what do we have for Thursday? We had multiple news through Thursday. We can actually check it here. This is Thursday. 8:30 is the open, so we had 2 high impact news from Euro at 8:15. 8:30 low impact news. I was not really expecting much from this one. 8:45 again, high impact news, right? 15 minutes just after the open, and then 9:10. So 25 minutes after this this other high impact news, we basically get this. So it was just filled with news, and it's like we could try and wait for everything to pass and then look for something, but as you kind of saw today, basically all of the move of the session happened through that. And even if we would have traded up to 11:30 just here, we don't really get much to trade. We do get the opportunity to buy, which I do think I said something about it, like I was interested in buying from here or seeing a retracement up to maybe this high to go lower. I don't remember. I did watch a little bit of this price action, but I was not interested in trading. Of course, I was not going to be risking money on it, right? But basically, what do we have through the day? Session opens here, trades a bit lower, then continues higher. Just takes liquidity, goes aggressively lower, takes liquidity, goes aggressively higher through New York, and phase 1 of New York kills them, taking more and more buys out liquidity. London's highs taken as liquidity through New York. A little bit of a weird price action here again. We have the news, and the open was on this candle right here, right? We have price first trading lower, then aggressively higher, mitigating something here. Maybe there's something that we could have used in there to understand that price could go lower and then goes aggressively lower. Could have we expected this to happen? Well, I mean, price here takes buy side and even created a little bit of buy side here. So going for these lows didn't really look that much, right? Because we had taken, in my opinion, a pretty good buy side liquidity. So a retracement down to these lows could have been nice. And also, if we look at it from a little bit of a higher time frame, we see that this is basically a range. Run on buy side, run on sell side, continuation higher, right? So we could have expected the price to continue lower here, but it was complicated. Again, the news weren't the only issue in this day. Well, I mean, it was the only issue in this day, because if we would have been in this session without the news, we could have definitely traded something like this, going maybe to this order block, the 50% of the move, whatever it is, right? Or just this sell-side liquidity down here, right? But usually, as ICT has said, when you see an impulse correction, that correction can't reverse immediately. It tends, or I don't know if it tends or just all the time, like 100% of the times, it just, when it's ranging, it has to cause an expansion, like a continuation of the trend, and then it can either continue, then it can either retrace and continue, it can go lower, take sell side, continue, or it could just reverse, right? But it can't just consolidate and then reverse without really causing that tiny bit of a continuation. Yeah, so this thing is that also consolidations create liquidity, and this below this lows is where we want to be buying, right? Because this shows, from my point of view, price goes aggressively higher, tries to go lower, right? Creating people to say, okay, let's trail our stop loss above this, below this lows, right? Trying to save a little bit of profits. Price goes aggressively higher, so they say, okay, so our stop losses are safe, between quotes, of course, here, or maybe even more people put their stop losses below this low, and then price does that. Just the market creating liquidity into the market, or manipulating liquidity into the market, as it usually does. Now, I kind of wanted to see this happening through session or through London, right? Previous week's high being taken, because it would have been great to see the first couple of reactions, because we are going above so much buy-side liquidity that it's definitely expected for it to just cause like a little bit of a retracement. And of course, we could have retraced based on this, right? Have a major impulse, we have to retrace at some point, and that's what I kind of wanted to trade. But as you can see, price does go quite aggressively higher through London, right? Taking everything, mitigating the weekly fair value gap, and just simply going lower, honestly. So after this exact price action here, this high, if it would have been created through New York Hill Zone, it would have been great, right? Because that's, at that point, I'm definitely looking for anything that resembled any kind of reversal pattern. And as an example, this was really cool, right? Because we have price going above liquidity, takes that liquidity, immediately changes direction. Fair value gap here, price trace into this one. There's also a 50-minute fair value gap from this. I think this low to this high or something like that, pretty close to it. Doesn't really matter. Thing is, price mitigates it here, and as again, right, if this would have happened through near kill zone after the session opens, mitigation of 50-minute fair value gap that is created after buy-side liquidity is taken. It also causes the market shift and everything. Run on buy-side liquidity, right? Mitigation of 50-minute fair value gap, entry on this one. And even if you didn't want to trade this one, price mitigates it, creates a little bit of a range, goes above it, buy-side liquidity taken, display clear displacement lower, trace into it, entry, right? Another entry. So these are the two lower time frame opportunities that we could find to sell. And as you can see, they turned out to be quite well, to work out quite well. Not sure, yeah, we just have gotten a little bit of a range, but we'll explain that a little bit of price action now. And it's definitely understandable why today's session did exactly this. Session opened at 8:30 right here, right? This is where it opened. And what did it do? It went higher, went lower, higher, lower, higher, lower. That's exactly what it did. But it did nothing more than that. It stayed between a range of what? 29 pips. Simply enough, right? That's all that it really did, right? And the reason for that is because look at London. Look at what London costs. London starts going a bit lower, taking sell-side liquidity, ranges, aggression higher, ranges, buy-side, aggression lower, aggression lower. We just had so much move through everything before New York that New York obviously has the possibility of doing something like this, right? It's just ranging, or what I was kind of hoping to see, which I kind of sent the screenshot of it. We have like a head and shoulders pattern, and we even have it on left shoulder, head, let's do it like that. Potentially the right shoulder. It was I kind of used it like this one. Sorry, this one, and I was expecting this to happen. So the reason why I wanted to see this work out, I wanted to see price breaking above this highs. It was going to take a lot of buy side liquidity. Also, there were going to be buyers on the retest. When all that what really was going to be, what's really going to happen is just this, right? Which was, for me, was like seeing the New York kill zone just creating liquidity into the market, and I was expecting it to take it and use it to just cause the continuation of that move, right? Which again we didn't get, sadly, but it is what it is overall. I could have tried to sold in some occasions. First run on liquidity after the open. This was actually really good to see, because I said, okay, so we are going to have a quick retracement, buy side liquidity taken, displacement lower, fair value gap, we get the lower time from entry, and we can see a little bit of a move, continuing the London move, right? But all that we really get was price going aggressively against this, breaks the high, no time to get an entry. Then I was looking for the buys, which I was interested on, and we could have gotten into an entry here, but as it was quite late, I decided to avoid it. But otherwise, I probably would have taken it and would have been a loss, being fully honest. And then if this high would have been taken as liquidity as well, might have thought of it. But in the lower time frames, we do get some stuff. If we can be serious and honest. Hold on. Okay. Oh, this is the high, yeah. So goes above, takes the buy side, right? At the same time, again, keep in mind that we're mitigating the 5-minute fair value gap. So it took sell side here. Wanted to see fair value gaps, never got any. Wanted to see fair value gap in here, never got any. This is the only fair value gap, really high up, and then completely turns around. And that's why, as an example, if we would have expected the fair value gap to show up and it doesn't show up, then there's a reason for it, right? And today, well, we kind of had that reason. And then turns around, price comes back, mitigates that order block, continues going lower. And yeah, that's pretty much it, honestly. That is really pretty much it. It was a very boring session. We never really got anything clear to do with this. And again, it's understandable due to previous week high, been taking all of that. Let me check the Telegram, because I wanted to show you, for those that aren't on Telegram, of course. Wanted to show you the week's forecast, which was in September what? Okay, here. I don't know why it opens Opera. So lower, taking previous week low, higher, taking previous week's high, ranging, continuing lower. That's what I wanted to see. So you can see this is on September 4th, 2045 New York time. Of course, the sell side was already taken, but it does go even tiny bit lower, and everything, and then goes all the way up to that. That's kind of what I wanted to see. And this is what we got overall. Yep, just wanted to show that. I don't think I had anything else to say about that one. An interesting week. I didn't take any trades in funded or challenge. Again, the only buy that would have been worth would have been this one. That if we would have held all the way up to previous week's high, what would have we gotten? We're talking about from around down here with the 35. Around there, I think it was a bit lower, a bit higher than that. Now let's call it there. Previous week's high, 55 R. Yeah, that would have been nice. It's definitely, I'm definitely not holding that one, but we can easily understand now why price had the probability of going all the way up there, right? First of all, the previous week's low being taken, it's just a lot of buy side liquidity, a lot of sell side liquidity is already being taken at that point. We definitely can expect price to actually go all the way up to the other extreme. And that is really all. That's really all. This was an interesting week. Week's forecast was on point, honestly. Yeah, that's pretty much it. I'm not going to talk anything else. So hope you enjoyed this video. I'll probably upload another video around the weekend, but I can't really say for sure if I will. I'm not going to make any promises just in case. But yeah, I'll talk to you through the weekend.